Hi, my name is Brenda Hunter. Most of you know me. I own Hunter CPA Group in Oxford, and I'm here to talk to you today about the taxes and the things that have changed so far in 2022. These are the tax brackets that have changed for 2022. Most of it's just been adjusted for inflation, but as you can see, I know that even most of the tax brackets are stayed what they've been and just slightly been adjusted. Okay, the reason I show this to you, this is the 2022 long-term gains, long-term capital gains. The reason this one's important is a lot of people don't realize that if you're single, you can have up to almost $42,000 of capital gains and not pay any capital, or $42,000 of other income and not pay any capital gains. And if you're married, $83,000. This became important back in 2020 when you didn't have to take your RMDs. And one of the reasons that Dan and Rocky are doing a lot of the RMD, or the Roth conversions, one of the goals is to get less and less taxable income for you in the future, because your Social Security is only taxable as much as other income you have, and your capital gains are only taxable as much of other income you have. So as the tax rates go up, some of these other things are not as taxable if you don't have other income. I realize some of you have pension income that there's nothing we can do about that, but the IRAs and the other things, we can control that if you don't have as much IRA income. Social Security, these are just, the numbers are updated every year for the amount you can earn if you're still working. Between 62 and full retirement age, which is different for everybody, it's somewhere between 65 and 67, depending on the year you were born. 1937 and 1960, it's prorated every 2 months. But you have to pay back $1 for every $2 you go over that amount. 19,560 and 22, that's what you're allowed to make if you're not full retirement age. You can make 19,560. If you go over that amount and you're not full retirement age, you got to pay back $1 for every $2 you go over. In the calendar year you reach full retirement age, you can make 51,000. Instead of having to try to calculate that, they just set a dollar amount. Once you reach full retirement age, you can make as much as you want. Just because you can make as much as you want does not mean it's not taxable. Social Security on the federal return is 85% taxable if you have other income. It's a calculation. For state, it's not taxable, but for federal, it is. It's a calculation. It might be not taxable, but that's another reason to get your money into Roths.